The Indian market opens with gains tracking positive global cues, but stocks come off morning highs. Most sectors led by metals. The broader market slightly outperforms the headline indices. Reliance Jio introduces new plans to acquire higher-paying postpaid customers, announces family plans cheaper than peers starting at 399 rupees a piece. Parent Suzuki increases stake in Maruti Suzuki with an open market purchase of over 300 crore rupees. Brokerage house Citi too has a bullish call. Maruti is its stock pick with a target of 12,500 rupees per share. PVR Inox hosts its first conference call as a merged entity, says it plans to open 200 screens every year. Voltas too surges about 3% as a call with analysts says room AC sales have remained strong while price hikes may also be on the agenda. A bunch of other stocks in focus. LTI Mindtree reiterating its guidance on its investor day, saying that the merger process is now complete. The company is on track to realize synergies of $8 billion along with a 200 basis points margin expansion by 2027. You're watching us here on Chartbusters, a fresh new edition. I'm Mangalam Malu, and the markets, while they're holding up in the green, a wee bit of recovery that we've seen, some relief rally tracking global cues, but importantly, we're off the highs once again. 17,211 was the high for the Nifty. From there, we've seen a near 100-point dip. Importantly, the mid-cap index is outperforming, so that should do well for us. And at the same time, we have a bunch of stocks which are doing extremely well. From the broader markets, Ramkrishna Forgings on account of an order win that it has got in consortium with Titagar. We'll shortly speak to the management of Titagar Wagons as well. And alongside that, we have IEX from the broader markets, which too has surged to about 5%, perhaps hopes of higher power demand as well. But it is the end or nearing the end of the financial year. That also means that a lot of companies signed agreements for order wins as well. And one such is PSP Projects. It's in focus after winning a 120 crore rupee construction shed order in Gujarat. PS Patel, who's the CMD of the company, joins in now. Thanks a lot, Mr. Patel, for joining in. Just wanted to understand, this 120 crore order that you've got, was it baked into your order inflow guidance or is it a new order outside of what you were expecting? At the same time, if you could give us a sense of the execution timeline on this, the sort of margins that you're expecting.
So this order, actually, the order inflow which we have declared throughout the year was 2,500 crore, which we have already crossed by declaring the order of Surat Municipal Corporation of 1344 crore. So this order of 123.38 crore is an addition to that expectations of order. And this is more related to a construction of a high-rise building in Ahmedabad. And the most important is that 96 crore is the civil work, but the 28 crore is more on the precast side, which is something which we are eager to execute also, because we have entered into precast industry and we want this industry to grow from here. And this year we have a quarter better orders in terms of precast. And overall order inflow, yes, we have crossed 2,500 crore and we are almost touching to nearing to 4,000, which is good for the company. And this order has to be executed in next 24 months. Overall, the order book, which is now outstanding, is at about 6,400 crore, which is to be executed in this last quarter and the years to come, which will be carried out in the next 2 to 2.5 years.
All right. Just wanted to understand any more other order wins which are likely in this month. I mean, last 15 days, usually people give a lot more orders to close out this financial year. So you said you are closer to 4,000 crores. Is there a chance that you go higher than that?
No, we are going to get closer to 4,000 after getting one order still, which we are waiting, because we have stood lowest since last three and a half months or 4 months. It is at the government of the state level, which is at the approval level. So if we get that order, then we will be near to 4,000.
How big would that order be? How big would that order be, which you are likely to get in the near future?
Pardon me?
How big is that order likely to be? The one that you're expecting in the near future?
Yeah. It has to be given before March end, if it is to be given, because we have stood lowest since last 3.5 months, but it is at the approval level. Just because of the election, things got delayed. But now I think we have been discussing last 15-20 days, so probably it should conclude before March.
All right. Just wanted to understand about Pandharpur and Bhiwandi. These two orders have been on a standstill. The last time you joined us, you said that there may be a chance that there could be rebidding for those. Has there been any clarity?
No, yes, Bhiwandi, yes, they have discussed, and the project has now, what we have heard, is been shifted from BMC to Mahada, and the project size has also been increased from 600 to 1800 crore or so. So that will come soon, but probably now I feel that it should come after March. And about Pandharpur, yes, that order is still standstill, and we have given him court notice for arbitration because our 17 crore is been not paid till now. And in Bhiwandi, yes, things have already been closed. We have been awarded arbitration, and arbitration proceedings have already started. But whatever the expense which we have incurred is already been considered in the books. So now the only question is about Pandharpur. If we get arbitration for that also, then both the projects, low-moving projects, will be closed from our end.
All right. The 6,400 crore order win that you spoke about, can you tell us how many of those orders were legacy low margin orders and how many of them are high margin orders? When does the company get rid of its low margin orders?
See, as such, it's not about low margin. The bidding criteria at the company level remains the same. We always expect an EBITDA level of 11 and 12%, and that makes the cost plus percentage criteria as what we have been quoting till now. And this is a 6 to 7 years of journey now, where we have been able to perform at 11 and 12%. So as such, there is no low margin project, but some of the projects may be hit by some of the escalation in prices, where like in UP, like these orders were given just before Corona, just after Corona, and the prices went little bit high. So there the margins can be hit by 1.5%. But overall, there is no such projects as we can say from first day that is a low margin project.
So let's wrap this conversation up then, Mr. Patel, with reiterating some of the numbers. Earlier, you had given the FY23 revenue guidance of 2,100 crores, which was trimmed from 2,200 crores. And FY24, you believed, would grow about 25% higher than that. So that comes up to around 2,700 odd crores. Would you stand by these numbers? And also at the same time, what kind of margins should we work with for FY23 and 24?
Yeah, we stand by that figures till now, and the margins which we always been telling and always try to achieve that, and that will remain within the range of 11-12%. That's our guidance. Usually it has crossed 12 at the end of the year, but the guidance will be in the range of 11.
All right, Mr. Patel, thank you so much for joining in. This was a good conversation. We hope to speak to you soon once you win the other big order that you just spoke about.
Thank you, sir. Thank you.
Right, with that, we will slip into a short break. But as we do, on the other side, we will be joined by Umesh Chaudhary, who's the MD and CEO of Titagar Wagons, after the company emerges as the lowest bidder for supply to the wheels to the Indian Railways, and this in consortium with RK Forgings. Welcome back. Let's talk about a couple of stocks which we have been talking about since morning, which is Ramkrishna Forgings as well as Titagar Wagons. Titagar Wagons actually has now moved to the high point of trade. And remember, this is a big mover over the last 12 months itself, over 170% in terms of a stock price move coming in. Titagar Wagons, along with Ramkrishna Forgings, has won an order or has been the lowest bidder for supply of over 15.5 lakh wheels to the Indian Railways. Umesh Chaudhary, who is the Managing Director and the CEO of the company, joins us now. Umesh, always a pleasure speaking with you, and good to see that you've been winning orders left, right and center. Remember, just a couple of weeks ago, when you were declared as the second lowest bidder for a big 58,000 crore order from the Railways, and now this one comes in for 15.4 lakh wheels. Just wanted to understand, how do the modalities of this work? What does the overall order value stand at, and between Ramkrishna Forgings and you, what is the revenue split?
Thank you very much, Mangalam. Thank you for your comments. Yeah, it's been a touch wood, a good moment, so can't complain. As far as this tender is concerned, let me just give you a little background about this particular tender. So historically, India has always been a deficit as far as railway wheels are concerned. And, I have answered many questions to many analysts, also to your channel, about non-availability of wheel sets and no production of wagons and coaches because of wheel set availability. So the Indian Railways, the government of India, came up with a wonderful initiative, and under the Prime Minister's Atmanirbhar Bharat Abhiyan, of making India not only self-sufficient for wheels and wheel sets, but also a net exporter for wheels and wheel sets. And I think this is actually a path-breaking kind of a thought that the government has come up with, wherein the government is saying that we will assure you an assured offtake of 80,000 wheels for the next 20 years. You set up a plant, so your base capacity is filled up by us, and then you set up a plant wherein you can take care of the other private requirement and export wheels. So this is the tender. The total value of the contract that the railways will place would be about 13,000 crores. But the total project would be much larger than that, maybe more than 2 times of that.
All right. So this initial 15.4 lakh wheels is worth 12 to 13,000 crores. And this is spread over 20 years, right?
That's right.
And what proportion comes to you? How much of that goes to Ramakrishna Forgings?
So this is, we bid in a consortium. It's about an equal consortium. And we will be working out the nitty-gritties, whether it will be by way of an SPV or it will be a part of the existing. So those are nitty-gritties. You know, we've just been adjudged the lowest bidder, and now the railways have to complete the process, and we hope that we'll be able to get the letter of award in due course. So, you know, those modalities will have to be worked out. But for both of us, for us and Ramakrishna Forging, who are our partners, it's something which offers us great synergy. From their perspective, the manufacturing; from our perspective, the market.
Right. So I understand that. You know, I'm just doing rough math here. 12 to 13,000 crores over next 20 years, and we've been doing that every time you win an order. Is including your share, 50% of that amounts to about 300 crores worth additional revenue for you. Is that correct? And when does that start to come in?
So that's Mangalam from the guaranteed offtake portion. As I said,
that's 80,000. So assuming that's double of that, so it's 600 crores, 550 to 600 crores.
The total capacity that should be economical and that one should target should be, and that's what the railways have been asking, is about maybe a couple of 100,000 wheels, instead of out of which 80,000 would go to the railways and the rest can be sold to the market.
And when does the first wheel roll out, literally?
24 months. So the plant has to be completed in 24 months, similar to Vande Bharat that we spoke a few days ago. So I think a lot of things are going to happen in the next 24 months.
And the orders that you win, the new orders, including Vande Bharat and this one, would be what, in the same range of 11 to 12% sort of margins, or will they be margin accretive, further accretive?
So this is a different business altogether, Mangalam. As you know, this is a forging business, so we'll have to kind of, I would say it would be an EBITDA margin that would be at least the same levels. You know, apart from the indirect synergy that it provides to our business, because, you know, we being the largest producer of wagons, we are now producing almost 8,000 wagons a year, which we will ramp up to 12,000 wagons a year. So our own requirement is going to be quite substantial. You know, I mean, it's going to be 70,000 wheels is going to be probably the requirement that we will have.
All right, Umesh, thank you for joining in. Of course, we kept it brief this time around and kept it only to this order, because we're sure that with the run of orders that you're getting, we will have you soon to speak about some other order as well. And I hope that happens. Thank you for joining in. So that's Titagarh Wagons. The orders that they've won, the minimum assured guarantee gives them close to around 300 crore rupees of revenue per year. But the total order could be around 4.5 times of that as well. A 50-50 consortium / SPV with Ramakrishna Forgings. Titagarh Wagons rallying, Ramakrishna Forgings rallying even harder. With that, we take a short break, come back, get you more on the markets and individual stocks on the other side. Welcome back. You're watching us here on Chartbusters. A bunch of stocks which are buzzing around from the broader markets right now. We have Glenmark Pharma, which has moved to the high point of trade. Voltas continues to do well. Some positive commentary coming in on the conference call out there. The company talking about taking price hikes and at the same time demand being strong for room air conditioners as well. Aurobindo Pharma, in fact, the entire pharma pack is actually doing much better today than it has been over the last couple of trading sessions. GSPL, on the other hand, as well as Indus Towers, have been the stocks on the lower end, but that's, just 1 in 3 stocks which are declining. The broader markets still in favor of advances. The Nifty now down 100 points from the highs, still holding up with a gain of 69 points. Let's see where we go. With that, we're out of time on this edition of Chartbusters. You stay tuned to CNBC TV 18. Trading Hour comes up next.